Today, we are speaking to Mr. Lim Eng Ping. Thank you so much for joining us here today.
Thank you.
Now, this is very exciting because Eng Ping is the head of Wealth Management Malaysia under Maybank's Group Wealth Management business in the community financial services sector of Malaysia. Now, in your role, Eng Ping is responsible for managing the three wealth segments, namely Maybank Private, Maybank Premier, and Maybank Privilege, as well as Islamic Wealth Management. Eng Ping has grown Maybank's assets under management over the years, and we sit down with him today to talk all things wealth and what it means to you, our listeners, as well. We're going to get into it. Eng Ping, are you ready?
I am ready.
First of all, tell us more about Maybank Wealth Management and what sets it apart from other wealth management firms or banks.
In Maybank Wealth Management, we strive to help our customers to realize their financial goals through sound and reliable financial advisors offered by our bankers. We offer services such as wealth and investment advisory, estate planning, financing, insurance, and other professional services to ensure our customers have a peace of mind in growing and preserving their wealth. Maybank, as most of you know, is the largest bank in Malaysia, and our wealth management franchise is also one of the biggest, with a total asset under management of 194 billion ringgit, with 38 premier wealth centers, 64 premier lounges, and 313 branches across Malaysia. We have the widest banking network around Malaysia that customers can engage our services wherever they are in the country. Our wealth management services also extend beyond Malaysia, to Singapore, to Indonesia, Hong Kong, Cambodia, and the Philippines. So customers can leverage on our cross-border capabilities in realizing their goals. Maybank is also one of the most established banks in Malaysia, and we are a trusted name by Malaysians for generations. Malaysians can always count on Maybank to deliver its services diligently, and that Maybank will always be there to support its clients in time of need. This, I believe, is what differentiates us from the competition.
The first bank account I ever opened was a Maybank account, and I've maintained it ever since I was 19 at that point until now. Maybank has been a part of my life already.
Thank you for your support.
It's like your family having you here with me, you know. Tell us about what are some investment trends or key themes to watch out for in 2025. Come on, we all want to know what's going to happen, right? How can investors position themselves to capitalize on these opportunities?
Going into 2025,
I'm taking notes, okay?
We think that the global markets will continue to be volatile, and the investment landscape may be dominated by some prominent themes that offer different opportunities depending on the investor's risk appetite. We think that the US growth may slow down to 2%, and the Fed may ease up on rates, though not as much as expected with Trump's inflationary policies. Rate cuts are good news for both equities and bonds. We are especially positive on US equities, as a Republican clean sweep means a lot of policies, usually very business friendly, will be pushed through with less hindrance. Companies are likely to keep making profits, which should help support stock prices and returns. Trump's America First policies could strengthen the US market's leadership, while a stable outlook for default means bond could continue delivering steady returns. For investors with growth as a priority, have a look at global equities, while those that prefer steady income might benefit from bonds or dividend funds. We would recommend most investors to get into unit trust funds rather than directly investing in individual stocks. This ensures that risk diversification while allowing professional fund managers to handpick stocks for your portfolio. Next, I think AI was a theme.
Here we go.
A recent theme, right? So it remains to be a game-changing trend. If an investor is open to higher risk, tech-focused or AI-related funds could be a smart play to tap into this sector's growth potential. On the geopolitical front, the war between Ukraine and Russia continues to impact oil prices, keeping them volatile due to demand and supply imbalance. At times like this, traditional assets like gold tend to shine. That said, it is a good idea to limit your portfolio exposure to gold to not more than 10%, as it does not generate any income. Trade tension, especially between the US and China, is prompting companies to rethink their supply chains. This creates opportunities in Asian countries like India and Malaysia as companies relocate their supply chain activities out of China. To capture this, consider investing in India equity funds or Asia Pacific funds for those that prefer to keep a diversified approach in investing in emerging markets. Locally, the Madani economy framework is driving investment in infrastructure, renewable energy, and green industries. We believe that Malaysia is undergoing the third wave of investment upcycle, seen from the positive momentum of approved investments. Investors can align these national priorities by looking at local equities or mixed asset funds to leverage on the economy's overall prospect. Regardless of your investment strategy, diversification remains essential. Staying informed about market development and consulting a financial advisor can help ensure your portfolio aligns with your financial goals.
Now, speaking of advice, many people struggle with the dilemma of either saving, investing for their future, or enjoying life in the present. How can we we help our listeners strike a balance when it comes to trying to make these decisions?
Here are some of the strategies to help us strike that balance. First thing, it is important to establish clear goals. Set specific measurable financial goals for the short, medium and long term. By separating between needs and wants, individuals can allocate funds for both future investment and present enjoyment. For instance, having a separate budget for savings and discretionary spending can provide clarity. There's this common rule that's called 50-30-20 rule. Right? This simple budgeting plan means putting aside 50% of income to necessities, 30% to lifestyle spending, and 20% to saving and investment. So this approach provides structure while allowing room for enjoyment without neglecting long-term security. Consider automated saving and investment. Setting up automated transfer into saving and investment accounts each month can ensure that future needs are being met without requiring constant decision making. What is left can be spent guilt-free, knowing that essential goals are being covered. So it is also important to consider time horizon. Assessing your personal timeline can help balance the decision. For younger individuals, prioritizing a blend of high growth investment while still enjoying life is possible because they have more time to recover from potential market volatility. For those closer to retirement, a more conservative approach with heavier emphasis on savings might be appropriate.
You're speaking straight to my soul, Eng Ping.
Yes, finally get advice from a financial advisor. As I mentioned earlier, engaging with a financial advisor can help individuals assess their overall financial situation and devise a strategy that ensures they are not sacrificing their future for short-term pleasures, but also are not overly restricting themselves today. These plans help individuals approach wealth management and lifestyle choices in a way that brings satisfaction now while securing their future. Maybank is of course here to assist all of our clients on this journey.
And that's comforting to know. I wish I had spoken to you earlier. We appreciate you so much for shedding light on all of these issues and we look forward to speaking to you again. Mr. Lim Eng Ping, thank you for joining us here today.